Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Apple report from Monday, January 8th, 2024. So if you're wondering if I sound a little different, I just need to explain that my good microphone broke or it's not functioning. I'm traveling using my laptop PC microphone, which will go on for the next few days until I remedy the situation. So just want you to know why I might feel a little tinny, but I think you can hear me well, and I'm going to move on to the charts. As usual, start with the big picture, work our way into the day itself. We fell to this channel top, which was anticipated over the last couple of weeks following a sell signal. I don't even know if we show the sell signal anymore. In part, it was closing below this channel bottom, which is presently well above the market at 197.71. This was the beginning of the sell signal into the low 180s. There was also, as you recall, a rising 1/3 speed line, which we're no longer showing on the charts. It's so far above the market right now. It came in kind of like this. It contained the first couple of days following the first sell signal, and then we closed below both of them a couple of days later, and that set up what was considered a 3 to 5 week sell signal that occurred in almost 3 to 5 days. So here we are. We're in the low 180s. This is still bottom picking territory. Wrong chart. This is still bottom picking territory at 180.15 on the daily chart, 179.79. Able to contain selling not only for the week itself, but also through February and even perhaps into later year as we can round back up from here off of this 179.79 to 180.15 region. You can see it actually shown here. 179.79 is the daily chart version. Now, I will mention that if we break today, and I'll just continue with the downside, despite the fact that I want to tell everyone who's been short the market for the last week and a half following that sell signal that you should be covering now and even reversing and going long. Ever so gingerly, I grant you it's like, stepping in front of a falling knife, but this is the area, the upper 170s, low 180s, where Apple can bottom out on a longer term basis through February and beyond. And we can round back up, and I'll give you those price points in terms of near-term targets in just a moment. But I will continue with this chart, which is to say that if we break, especially if we open today below 179.79, we could within the day test its sister formation at 176.65. But I will also say that closing below 179.79 may well be the early signal for reaching back, falling back, I should say, into the low to mid 160s. Now, about that, closing today below 179.79, I'll say this. If you've been bottom picking the market in the low 180s, I say liquidate that long position. Should you then go aggressively short as we move through the rest of the week, anticipating 3 to 5 weeks bearish continuation into the low to mid 160s? Well, I'm not about to tell you what you should do, but I will say that you should respect 176.65 for its ability to not only contain daily selling pressures, but possibly for several days. And then, the scenario that could play out is we then turn back up and close the week itself back above this 180.15 formation. And if that does occur, then we're still in this potential a longer-term bottom-picking scenario. So I will say that closing the week below 180.15 is your signal for falling back to long-term support in the 163.89 to 165.31 region. This is an area that we settled above in May that set off a long-term buy signal. We did top out in July, fell back to these structures. They held nicely. Whether or not we retest them yet again has everything to do with whether we close Friday, the week itself, below 180.15. Now, if you're antsy and you want to play the short side, a bearish continuation into the low to mid 160s following a settlement today below 179.79, I think that's perfectly fine. It's just that you obviously want to manage your risk throughout the week. Know that the market could bottom out for a day or more at 176.65, and also know that the market could round back up later in the week to close above 180.15, and then there is no good reason to hold that short position, in my opinion. In fact, this is a classic head fake to the downside, where the market could rip its way back to the upside. Just merely closing Friday back above 180.15 does poise for a significant rally, I think, over the following 2 to 3 weeks, up to what is now, a descending two-thirds speed line at 192.66. That is based on the high from several weeks ago against Friday's low. This is dropping daily. I think this is your 2 to 3 week time frame, by the way. You're bottom picking the 179.79 to 180.15 region in anticipation of 192.66, a descending two-thirds speed line where the market can top out on a weekly basis and by that point in time possibly fall back within several weeks into the 180s again, the lower 180s. We could fill this wedge out between 179.79 and 192.66 for the next 3 to 5 weeks, as this area could be reached within 2 to 3 weeks, and we can fall 2 to 3 weeks after that back into the low 180s. It would be a settlement above 192.66 that would tell me that we actually have a good low through February, and we should over the following 2 to 3 to 5 weeks push into the 205, 210 area. As I mentioned before, there is a new rising channel top that we haven't committed to yet because we don't really know exactly what the low will be. But once we begin to turn up, we will begin to show you that if you draw a trend line off of these lows and cast the same rate of rising off of this high, it takes you presently in the low 200s, but 210 by the time we would test it, if over the next 2 to 3 weeks we can close above 192.66. But I don't want to get too far ahead of myself here. I will say, and this is actually a good image. Let me take you back to this one here. 182.76, the high from Friday, is also the high of the low. It has pivot point qualities. I will say that if we close today above 182.76, we should, within 1 to 2 days, reach 187.26, where we can place a daily high, possibly fall back into later week. If we close above 187.26, then we're expecting within 2 to 3 to 5 days of that, this previously mentioned 192.66 descending two-thirds speed line. But if I'm looking at the 2 to 3 week time horizon, this 179.79 to 180.15 area is your pivot point, above which 192.66 in reach. And if we close below 180.15 on a daily basis, yes. A 179.79 on a daily basis, yes, you can act on that. But what I really want to say is if we close the week below 180.15, then we've got a 2 to 3 week, 3 to 5 week sell signal back into the 163.89 to 165.31 region. So if we, if you're bottom picking the market, as I say, there's so many ways to nuance this, but if you're bottom picking the market right now and we close below 179.79 and you're bottom picking the market over the 3 to 5 week time frame, anticipating bullish continuation over that time frame, and we close below 179.79, you should consider covering that that long position. Should you go short or not? I think there's a case to be made for that. Certainly, if we close today below 176.65, then probably within 2 to 3 weeks we fall to 163.89 to 165.31. But I do like to use weekly charts for longer term moves, and by longer term I'm talking 3 to 5 weeks out. Closing Friday below 180.15, 163.89 to 165.31 anticipated, where we could bottom out actually through the rest of the year, and from here round back up to this double top area within several months and higher. Overall, yes, 235.03 still remains a big picture objective, but the question is how soon? And I don't even really want to go there anymore. I do want to see recovery, and I will say I'll start talking about 235.03 as a possible longer-term objective once again that's in reach, say, by mid-year if we can close over the next few weeks above 192.66. Until then, this is our battleground. And I do think 3 to 5 day swing traders, last thing I'm going to say here, 3 to 5 day swing traders can bottom pick the upper 170s, low 180s for 187.26. 2 to 3 week swing traders can do the same for 192.66. And if we close today below 179.79, I don't see a good reason to stay long this market through the rest of the week. Short-term traders, day traders can have that 176.65 all they like. And if we continue closing below 179.79 by the end of the week, I'll start talking about this low to mid 160s as our next 3 to 5 week target. But if we close the week Friday above 180.15, we're still in longer term bottom picking a mindset or a framework. That, pushing 10 minutes here. I'm going to leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. Check out that 5-day free trial. You won't regret it. I'll be back tomorrow with Tuesday's Apple Report. You have a great day.